So the chingus are back in different locations, of course, as always. And the confession. So we're a little bit off schedule, guys, because I sent you that note like a couple hours before we were due to schedule about how I went camping with my children, and of course I destroyed my body and my mind from that one night. So we had to fit this scheduling in a different time. And I think what came of that, though, Ian, you had a pretty good idea, which is we should think about doing a guest fourth comma, right?
Right. Yeah. So whoever wants to, use a rain check, they can just skip a week, and three of us can still do the show. So I think we're looking for a fourth comma. Could be a guest for now, but maybe a permanent one too.
Yeah.
I like the
So
idea of that.
if you want to be an honorary Korean Chingu and spit fire about AI and gossip with us on a weekly basis, please reach out and email or ping one of us.
Doesn't have to be Korean, but definitely have to be in unhinged, like the three chingus you see here. All right, guys. Well, we had a full week and a half of news here. Why don't we start with the one that is lighting everyone's pants on fire, which is Anthropic filing for its IPO. So, interesting timing, Ian. SpaceX is due to list as early as June 12th, is a rumor, Friday of next week as of this recording. And it looks like Anthropic is making the jump over its primary competitor, OpenAI. How are you interpreting the timing? And is this the right time for them to IPO?
So I think we talked about this already in a few parts before. I think the timing for these companies going IPO matters. Whoever goes first IPO as an AI company will set the market price and market multiples and everything. So we all thought OpenAI will go public before Anthropic for sure. But then Anthropic just went ahead and filed the confidential S1 draft, I think last week. No, it's actually 2 days ago. So I don't know. It's a bad timing for OpenAI because we all believe Anthropic has a better financial statement than at OpenAI's. So if that sets the price, or if that's the expectation of the retail investors, it's going to change dynamics in terms of how OpenAI will be priced and how market's going to think about their multiples. So that's interesting. But the other side is that what if Anthropic's financial statements aren't as good as we thought it should be? So even if there are rumors like Anthropic was profitable and all that, nobody knows yet. Maybe GIC knows, but we'll see. It's a different standards. The way we do these audits and everything, and how you should be doing your audits and the cleanings on your financials to become a public company. So I'm excited for this either way.
Yeah.
Did you have a reaction, Kevin, when you saw this stuff?
Well, I think what Ian said is like, clearly they're trying to come to the market before OpenAI, or at least, file confidentially first. I think the other thing is that they said, it's an option, right? So they didn't signal that they would definitely go public after like the review period, which like some companies have said they will definitely go public, very imminently. And so I think it's somewhat interesting to see that like they're considering it an option, but it's not something that they have to go public with. I think, the numbers, they followed confidentially, so we don't unfortunately have the numbers that we can all like dig into. But I think based on everything that we've seen from like leaked numbers, they do have better financials and better, it will be probably like a better financial, economic, numerical story than what we saw from OpenAI. So I think they just kind of want to be ahead of the curve and show everyone, hey, we've got our stuff, we got our stuff in order. We know what we're doing. And I don't know. I feel like that's kind of the sense that I'm getting. Like whether or not they will actually go public, we'll see. But certainly now it's an option they can pull on.
I mean, if you put on your ex-banker hat, Kevin, can you talk us a little bit through what this process looks like? So they filed, and there's a month-long confidential period where there's a review, it sounds like. And then what happens, though?
So, I mean, it's a really interesting process, right? Like you can, people can kind of read about this. Like this is what investment bankers do, by the way. One of the key things that, Goldman Sachs, Morgan Stanley, JP Morgan, when so you have a friend that says, "Oh, I work in investment banking," or know someone that does that. Basically, these banks are putting together a bunch of materials like decks, memos, like the S1 filing, which is this very, very, very long, document that talks all about the business and lays out the financials and risks and, thesis about this potential company, and spends a bunch of time taking the company on a roadshow to meet with other large public markets investors like BlackRock, Wellington, Fidelity, all these huge mutual fund, public market funds, and also hedge funds as well that buy into the IPO. And they need to create essentially a book of business, right? They need to create a book of demand that all these, hedge funds or public market funds will say, hey, I want $100 million worth of this. I want $1 billion worth of this. And then they build a book that ultimately gets purchased during the day of the IPO. And so a lot of the process, going through that is a lot of like demand building and figuring out how many customers do you have in the market that actually want to buy your stock. So it's a pretty tedious process. I mean, the legal review is also pretty tedious. Like the S1 typically gets filed, but then the SEC and regulators will give feedback, and they'll say, hey, can you change this? Can you edit this? Like lawyers will give feedback, the bankers will give feedback. Everyone just keeps giving, comments, and then it gets changed and iterated over and over during that period of time as well. So it's just a lot of paperwork, and then like showboating like the company around to a bunch of investors and seeing who wants it.
Fascinating. I don't think I've ever had anyone walk me through it like that. So that was a lot that I learned there. I mean, dudes, they got chingus. They have to they have to go public this year,
They
right? I
have
mean,
to.
like OpenAI is going to be coming up after them pretty soon. And the point that you made in our previous podcast, Ian, was pretty interesting. Of like, there's only so much liquidity in the earth, right? So, I mean, wouldn't you want to front run your biggest competitor by just? It's an interesting like prisoner's dilemma. There's almost like no choice but to proceed. It feels like. Okay, well, I saw you nodding your head there, Ian. I don't know if there's a comment that you had for that.
I don't know. It's the liquidity of the retail investors for sure. There's going to be some changes, a lot, especially with the SpaceX IPO. I think the price is set now. They're raising $75 billion or $80 billion, and at $135, it's a lot of money. And I think there's going to be movement from tech stock to SpaceX stocks and Anthropic stocks and OpenAI stocks, and the market's going to be a mess. That's what I'm really excited about, and you know but then there's going to be a lot of liquidity events for private investors. I don't know how that's going to flow into public market too, because there's going to be some liquidity events for a lot of VC funds who invest early on this Entropic and on all those. They're going to have a lockup period, but they're going to, I mean, SpaceX investors will be able to liquidate at least 20% of their investment on day one. So there's going to be a lot of money too in the market. I don't know how those are going to even out, cancel out each other, but it's going to be a wild ride for a lot of us for the next 6 months for sure.
So all
Yeah.
three of the chingus right now have exposure into SpaceX. After it happens, we should talk about when we dumped and whether you did the full 20%. This is not investment advice, but yeah, it's so much like freaking money changing hands. It's going to be crazy.
Well,
Kevin,
it's
do you have a
also
last
like
word on this?
locked
Yeah,
up, right? Like there's
sure.
a huge lockup. I mean, it's a very complicated lockup schedule that like opens up like 7% every like few months or something. It's really complicated and crazy. People can look it up. But like I don't know, it's like in some cases like we can't even decide when when you want to sell
Yeah.
because it's like restricted. But I was just looking up the numbers. So like if you add up what like SpaceX, OpenAI, Anthropic are expected to kind of raise in the public markets, it sounds like it's around like $200 billion, and that is
Hmm.
actually, oh well, it's been a very dry period for IPO markets, so it's four times what the 2025 IPO market was. So it's significantly larger than like what we've seen recently in terms of like the amount of capital that these guys are raising. I actually wonder if some of them are going to bring that down just because a good way to like pump up your stock is that instead of like raising a
Vote
lot,
less.
you decrease the float. So basically the float is how much of the company is trading in the public markets. So if only like 10% of the market cap of a company is trading versus like 30% of that company's market valuation is trading in public stock, obviously you're going to have a little bit more control over pricing if you're floating a smaller portion of your overall value. And so I wonder if some of these guys will just be like, hey, let's just decrease the float to, I don't know, 10% or less. And that way, like retail plays a huge influence. There's other ways to like buy back shares and be a little bit more conscious with how you manage your stock price that will make it hopefully a little bit safer for these companies.
Gonna be crazy dynamics. And speaking of crazy, I actually want to move on to our second story, which is Kevin's old boss. I'm talking about the legend himself, Masa, right, from who leads SoftBank. So I want to read the quote that I got from Instagram. It was either Kevin or Ian that shared this, one of you both, which is
I think I sent it because I was like,
okay.
oh, when Masa's, I have something to say about this.
Yeah, okay. Well, let's go to you first after I read the quote, okay, Kevin? Here we go. So, the story is about the AI revolution being much, much larger than the dot-com revolution in the 2000s. And here's a quote from, Chairman Masa, which is, "I think this is more. This is like more than 10x, probably 50x bigger than dot-com. 50x bigger."
Wow.
He
I don't
may
know
be
where you got that
right,
number.
Kevin. Yeah. What when you saw this and you thought about your old boss, reactions?
Like, first of all, I have no idea where he came up with 10x or 50x. Like, I don't know if he's doing some like mental ninja math in his head right now, like of how he's
That's
getting to these.
racist.
It's
It's okay.
Korean,
We're all Asian,
not
so
ninjas.
I
Yeah.
mean, I was actually very bad at math in elementary school, but
No, the ninja part, but yes, go ahead. So many levels.
no, no, I'm saying his math is good. He must be doing something like very complicated in his head. I don't know. But it's like I don't know where he's getting these numbers. But there was always a saying that like when SoftBank and Masa is starting to like back up the truck and like dump all his money into something, it's like that's the top of that's the top. You've reached the top. And so whenever you see him like, hey, we gotta I gotta keep going. Like we're gonna, this is the biggest thing in the world. Like then it's like, okay, I wonder if like, you're the last one holding the bag, right? So that's my kind of fear. But the thing is, I still feel like there's room to run because we haven't had these IPOs. My hunch is actually that the IPO stuff reminds me a bit of the SPAC days when during COVID everyone was SPACing, and I feel like there's going to be a lot of retail interest, demand. And I actually think so the IPOs are going to cause the market to continue to like go upwards. But I don't know, man. When he says that, that gives me a little bit of hesitation.
I
Yeah.
mean, are you hesitating to, Ian?
Like last time when Masa was excited about market this much, I remember was WeWork. So I don't know. And he has a massive exposure on OpenAI. And Anthropic is trying to go public before OpenAI. Of course he gets nervous. So the number becomes from 10x to 50x overnight. So I don't know how this is gonna end up. Like everything is wrong. So I don't know where to start, where to begin to,
Well,
how to
I'll
fix
share a
this phone and
reaction
all that.
here. So the words are interesting, and I'm taking this out of context, but he's talking about the industry. I think, unlike maybe some of the past claims around WeWork, he was citing like a very specific company, right? Like WeWork is going to be like the generational $1 trillion company or something like that. But he's talking about the industry at large. I mean, is he synonymously talking about OpenAI, just talking his book?
I think that's a big part of it, right? They own, I think, close to like 13% of OpenAI, like a gigantic stake in this, right? So he has to, I mean, he has to defend his book. I think I was also reading like a little part of the other interview, the rest of the interview, and he was saying, I think they asked him like, is there a possible like correction? And he said, there may be some correction, but that will be the best investment opportunity to me. And so I think he's almost saying like, I'm not worried. Like if things go
Mm.
down, I'm gonna double down and buy the dip. Which, you know, maybe what he's saying is that AI long term is like a 50x opportunity, right? He thinks that this is going to be huge over the next whatever 10, 20 years, but in the midterm, you know, in the near term, maybe there'll be some, you know, volatility and fluctuations that he's still going to buy the dip because he thinks this still has, you know, 50x to go over like a decade or more.
You know what Masa kind of reminds me of in this statement is Michael Saylor, right? Chairman CEO of Strategy, previously known as MicroStrategy. So famously, this guy's been pushing his all of his balance sheet into Bitcoin. He's a massive Bitcoin hodler, and kind of says all the same things, right? Which is just like it's gonna like all money is gonna transfer into Bitcoin, and it's gonna be worth like 10 million a Bitcoin pretty soon or something like that. And then guess what he's doing now? He's buying bonds.
Right.
Like he's stopping his buys actually at Bitcoin. I think like
He
he took
actually sold 32 bitcoins yesterday or the day before. Did you know that? He
32 or
sold bitcoins,
32,000? Just
just 32.
well,
32.
it
But
sounds
it's the
small, but he's never sold I think a Bitcoin
exactly,
before. Yeah.
Oh.
exactly. That's the whole point. That's why Bitcoin is crashing, but not just because of him, but the market sentiment is going down because Michael Saylor started selling bitcoins against whatever he said forever. So
I mean, you got to put food on the table and pay that mortgage, baby. You can't do that in
I know. I
Bitcoin.
was like, maybe he needs to buy a house.
Yeah. I mean, 32 Bitcoin was at like 60,000 on the floor right now.
Not a
Like
lot,
that's
huh?
it's not that much, right? So
I mean,
like
it's 200,000 now. Yeah.
Yeah, that's something's weird with that. That's like I don't know why you would sell such a small like his house is gonna be worth way more than that. I don't know.
he
He needs to pay
maybe
his
he has
grocery bill.
a little
Oh, it's
condo in
actually
Redwood City.
$2 million. I don't know. I don't know. Why would
Yeah,
he need two
that's
million
weird.
dollars? Yeah.
Well, all the best to our Chingu Masa. He is also a fellow Korean, believe it or
Yes.
not. I don't know if a lot of people know that, but
Yes.
Masa, you're always welcome to be our fourth comma if you want to come onto our show. Um, let's also talk about. I like this next year. I want to talk about NVIDIA and Microsoft because the reaction, Ian, that you shared was hilarious. So the story goes, NVIDIA and Microsoft are doing a collab. They're doing launching a bunch of PCs powered by the RTX Spark, which is like a new super chip that NVIDIA has developed, right? And then the story we shared it like in our little text chat, and then Ian was quickly responding like, "This is pure dog shit." Do you want why the skepticism behind this collaboration?
And I just am not really a big fan of. I mean, they're trying to catch up with MacBook and maybe Apple ecosystem, but the problem is it's not just the hardware on Windows devices; it's the ecosystem that they have on Apple. I almost said we that we have on Apple. It's I think the way it works in every development of AI is happening on Mac. They're trying to, snatch some of it, move it to, Windows PCs with the new RTX chips and everything. And I think that's a good attempt, but it's not going to be useful in the near term as Apple devices as useful to us right now. So, but what I'm excited about this change is it also points us to the direction that everybody's going for the local AI. Because what they're talking about is with this new chip on a Windows PC, you're going to be able to run a big enough of an AI model locally to become your personal agent, which I've been saying forever. We're not. That's why I'm really, worried about OpenAI and Anthropic because I don't think there's going to be a lot of people like normal people using their services for long because I'm paying $200 per month, but if I can pay $3,000 for a PC that can have all the performances that Anthropic, I don't even need 4.8 like Opus 4.5 or 4.6 on my device. I would always pick that over the subscription and cloud options. So I think the one direction that NVIDIA and Microsoft are trying to do is great, the localization and personal AI and all that stuff. But then NVIDIA, Microsoft collaboration, I'm not really excited for it because I don't think it's going to be a good device that you want to buy. But I wish Apple can, get better products
Hmm.
because,
I,
they're chasing. So,
so between Apple and Google, which one do you think is actually going to create a device that you want to use?
I want to buy Google's new glasses. with Gentle Monster and all that. But then I still want everything to be Apple ecosystem because like it's the ecosystem. I copy something on my iPhone and I can still paste it on my MacBook. You don't have to do all this jazz to move those stuff. And whenever I do this 2FA, it comes to my phone through my phone number, but I don't need to copy from my phone because it also comes to my MacBook. And I don't need to find the Wi-Fi password whenever I go somewhere new because my iPhone has password for it and it's going to transfer to all my Apple devices. It's just the experience that I get out of this ecosystem is much better than what you can have from this segregated, Windows, Samsung, and all those Android or Windows ecosystem players.
Let's
Yeah.
keep shitting on Kevin a little bit here. So, Kevin, you're the guy who's still using like a ThinkPad and
No,
Outlook.
no,
Are you
no.
gonna
No, no.
run to get one of these things?
I have a Mac. I actually use a Mac, and I have an iPhone. I'm actually pretty Apple ecosystem as well.
Okay.
What is the only
But
thing?
did you use Office?
I use Outlook. Yeah, I use Outlook,
Yeah.
like Microsoft
Actually,
365.
like Office is good now that the cloud integration has happened.
Oh,
I
it's
actually think
working?
it's pretty
It's
good.
working
Yeah. Oh,
well?
it's really nice.
Okay.
So
What do you
yeah,
use it for? Like within your emails?
spreadsheets.
Oh,
Yeah,
interesting. Okay.
yeah.
I've used
I
it
think
to
it's pretty
draft
clever.
some emails, which is also pretty, like it's connected, like there's a connector from Microsoft, and so I can have it like do a bunch of stuff in my inbox too, which is kind of cool. But I was gonna say like Ian's like the only Korean is the Korean in Korea right now, like saying Apple is the best is the best. He doesn't have a single Samsung device. Um, but it's interesting, right? Because basically you're saying like I can see this vision of the future where it's like if everyone doesn't do the cloud and everyone wants their like local device to have preloaded models and everything, like the hardware folks are going to win, right? Like the Microsoft, Google, Apple have a real chance of like creating a great product that has a built-in model, built-in, you can use it all. It's a local model. You don't need OpenAI or, Claude on it anymore, and it does everything you need to do, right? And they just, if you love the experience on whatever device that comes on, like the hardware folks could actually be the winners.
Yeah. Uh, well, good luck to Windows, Microsoft, and creating that ecosystem. I think I'm Team Ian on that perspective. Like you guys have a lot of work to do to make this work. Maybe gaming. That could be an interesting one, right? Nvidia's pretty.
Gaming, yeah.
Yeah.
The Call of Duty, the Modern Warfare 4, it's about Korea, North and South Korea. Koreans are
Really?
going crazy over it. Yeah, so you're going to be able to kill North Koreans on PC now.
Well, they have a lot of family there, I think. So don't. If anyone looks like me in the game, don't shoot them. Okay. uh, all right. Well, let's go on to some shitty news, troubling news versus the clowny news we just had. Is okay. Two stories that kind of came across our desk that Ian pointed out, which is one. I'm just gonna read the headlines. Cliffwater Private Credit Fund stung by a 17% redemption request as of June 2, 2026. 17% redemption. That is a wild amount of LP money asking for their money out of that fund. And what we think this is pretty closely tied is KKR, Ares, Blackstone tumble as partners group caps private equity fund withdrawals. So people are pulling out a late stage and private credit right now. That feels like a canary in the coal mine. And Ian, why don't we start with you because you found these stories?
Yeah, because this is something that we've been following for a while. I think it's been going over 7 months. We had some, private debt explosion that is connected to First Brand and all that kind of stuff. This is the fourth event that happened in private credit space in the last 7 months, and the fifth event is what we just saw, the partners group, the private equity part. So it's always been private debt and private credit for a while, the four times that the LPs were trying to pull their money out, but then the funds were like, no, we can't do that because it's going to cause a bank run. And then now it's spreading to the private equity funds. I think that's the significance here. And the CEOs of these funds these investors are recognizing that, hey, the private credit risk is spreading out to private equity funds too. So I think it's getting more and more serious. I just wrote a newsletter about this morning and then I found out about Partners Group. So I'm going to write another one again right now. But it's the private market is cracking. So
Yeah.
I
I
don't
mean,
know. The market is not that big though, so we're not sure.
yeah, I mean, private equity, by definition, private credit is like more senior, like to
Hmm.
in like a capital structure, right? Like debt holders get paid first. So like private equity is in that same capital structure, but more junior to like private credit. So when you think about like Blackstone, KKR, all these companies going to buy, leverage buyout, this giant, software company and putting a bunch of debt on it, like the credit falls out first because
Right.
it's like, okay, this is like, actually, you know what, I got that wrong. The equity should fall out first, actually. So it's
Mm-hmm.
kind of weird right now because theoretically the private equity folks, their equity should have been wiped out, which we saw, right? Like Thoma Bravo got
The
their,
Fama Brava happened, so
yeah,
yeah.
exactly. And then the private credit is getting knocked out. But it's funny that like all these private equity firms, their funds should also be like marked down quite a lot too. But I don't know if people have have started to realize that yet, because private credit story has been huge. But really all these equity, like, in the capital structure for these private, companies should also be marked down if the credit is marked down, you know?
Exactly, but the markdown hasn't happened yet. But then it's happening because these large private credits are failing and private equity funds are failing, and some of those company or funds are actually public. So Partners Group is public, so they lost about 17% of their, you know, the stock price overnight, and then Blackstone lost about 5%, or those large PE funds that are publicly listed have lost, I don't know, 45% at least, and maximum 17%. So it's starting to show. And once those big ones mark down their books, the rest of the market should mark down it too, because the LPs are going to look at your book, even if you're a small fund. Hey, these guys marked down this specific deal and those kind of stuff. So they start to compare. So you're going to be forced to mark down your fund performances and everything. And people will see, hey, we need to pull the money out. Private equity is going down. So I think it's the sentiment, LP market sentiment that's starting to show once you have these markdowns happening.
I want to explain something to our audience that who may not understand some of the dynamics of markdowns, which is really funny, right? So, like in private equity or even venture capital, right? These are not publicly traded companies that can trade at different share valuations on a day-to-day basis based on supply and demand. So, markups, valuations going higher, or markdowns, valuations going down, happen on a less frequent basis, right? Often, like this is an exercise that's done on a quarterly basis, even to put down your marks. In early stage venture capital, this is where it gets really clowny. So let's say that me and Kevin each run our own pre-seed fund, and we invest in founder Ian. Um, Kevin might do the right thing and say like, "Oh, Ian's business is doing really badly" or something, and then he's gonna just preemptively mark him down as to like a $1 valuation or something. But Eric, who's a shady piece of shit venture capitalist, might actually keep the mark at the original valuation because maybe I'm going to be raising money soon and I want to show like the marks are. So there's a lot of inconsistency actually, especially in earlier you go in private equity, which is basically venture capital, of like inconsistent marks. But a lot of this is just in a black box where it's very difficult to compare positions among funds unless you're an LP in many of them. Now, what I'm learning actually from you guys in, I guess, growth stage or later stage private equity, right, is that these positions are much more publicly known, right? So I can't like hide my mark when Kevin's doing the right thing. Like that's just, like one of us marks down and like basically topples everyone else, right? So
Exactly.
this
Yeah.
feels like a contagion, right? Is
Mm.
has already began. Is that the right interpretation?
Yeah, I think so. I think it's like
Yeah,
a
I
lot
think
of
so.
you're comparing, hey, Apollo, Blackstone, KKR, like they're probably in a lot of the same deals together. And it's like one LP is like, how come KKR is marking it at $10 and Blackstone's marking the same deal at like $8? Like, and they talk to them and it's like, why, can you explain this? And then, inevitably it probably comes out that like, hey, like it should probably be $8. Blackstone just hasn't marked it down yet because they're trying to like, they're probably going to fundraise. They don't want their stock price to take a hit. For many, many reasons, they'll just want to keep it where it is, right? And I think the other thing that's causing this contagion, perhaps, is also it's like, say that you're an LP or an investor, and you have private credit, you have private equity, and it's like those also overlap, right? So say you have, software company A, where Blackstone has the equity and then, Blue Owl has the credit. And it's like Blue Owl's like mark the credit down to like almost nothing or like half of it. And it's like the equity is still marked at 100% or like, it's not marked down that much. And it's like, okay, that makes no sense. If the debt is marked down half, then the equity should be marked down more than half, right? The equity should be gone at that point. So it's like, why are you ascribing any value to the equity? So I think there's just a lot of like, you can start to compare notes across these different companies and across the capital stack of all these private equity, private credit firms, and start to put the puzzle pieces together. Like something's not adding up here.
You know who I want to be? I want to be an investor right now, or fly in the wall of the investment team for the Saudi Public Investment Fund. Right. So this sovereign wealth fund is a really aggressive investor in U.S. everything, like equities and all that stuff, right? Credit, all that stuff. So they must be seeing all the data right now before everyone else. And I can only imagine like the what the fuck conversations are happening because they got to see that there's some sort of calamity that's on the horizon at this point.
Yeah, some of them might be in trouble. Like the person who invested in Thoma Bravo and specific deal for co-investment that blew up last month. And he must be in trouble too. So this is connected to LPs too. So if you're an LP who invests in Cliffwater now, you're going to be in trouble. You pick the fund and you're going to be responsible. You're going to have to write up a massive letter to everybody that, hey, I fucked up and this is what's going to happen. So it's going to be a mess for all these PE funds and LPs too.
Fantastic. I think actually my wealth guy put me in a little bit of a Cliffwater fund as well. So this might be my last 3 commas podcast. I'm going to go through the 2 commas podcast. I think one comma. I mean 1 comma podcast or 0 comma podcast very soon, I should say. All right, guys. Let's lighten the mood a little bit here. Okay, it's not just like shit. Maybe it is. I don't know. But let's go to this last story, which elicited a real chuckle across Silicon Valley in the last week, which is, okay, I'm going to read this. It's the story about a $3 million home listing in San Francisco, and they aren't just accepting cash. It seems like their preference is OpenAI or Anthropic shares as payments. Okay, it's a 3-bedroom, 2-bath property in a good location, Dubois Triangle, right? That's pretty nice, I think. $3 million house. So seller will take Anthropic or OpenAI stock as payment. This is a fucking bubble that's about to pop, right, guys?
I mean, I'm wondering if maybe this is also like a marketing, scheme to get a bunch of attention for the property so that they would get better offers, right?
Okay, that's smarter than what I thought.
It's like, okay, oh my gosh.
That's right.
Yeah, it's like, okay, if I got like, a million eyeballs on my listing, someone's going to come up with a good offer, even if it's not in, shares of OpenAI Anthropic. But like, I know that a lot of people looked at this. So everyone that's interested probably is going to, try to bid it,
Yeah, I think a lot of employees or people who had their stock can actually see, hey, I don't have to sell it. I don't have to wait for the IPO. I can actually buy it now. So it's actually a legit marketing, and you can actually get some lead from those employees or, I don't know, related people for that.
But the thing is, like, I don't know if they can even transfer the stock, right? Because, the thing that Anthropic, I don't know if we talked about this on the podcast actually, but like Anthropic put out this,
and things like that.
yeah, like they said all SPVs are invalid, be very careful about secondary market transactions. Like if they're not approved by the company, then you can think of it as void. And so it caused a huge bunch of, as we all know, like it caused a huge like uproar in the VC and kind of investing community because there's a lot of SPVs that have been done on both of those companies. And so now I'm like, well, I don't know, even if some employee was like, I want to give you X, shares in Anthropic that I have for this house, I don't think the company is necessarily going to approve that because it would be such a small transaction.
There is a way to do this. And I think there are groups like 137 Ventures and others that have like these exotic products, which is you could be an Anthropic employee pre-IPO. We can write a contingency letter to the seller saying like, you'll assign shares upon IPO to me or the equivalent of like, right now we agree like this is like, 10,000 shares, like the value of this house, let's pretend. I'm not sure what it is. And then And then whatever that equivalent is upon like IPO, like you'll assign to
Yeah.
me, right?
It's like a
There's like
forward
I've heard of
contract.
those kinds of things
Yeah, yeah, it's like a
happening
forward
before.
contract where you agree
Yeah.
to deliver
Right.
the shares. Like you pay for, you give them the house today, and then you say, upon whatever event, you will deliver the shares to me. But the funny thing is, that's always been very sketchy because that's basically like an IOU, right? Saying
It is.
Mm,
you're trusting, I mean, obviously you have a piece of paper, a contract that is signed by both parties, but it's basically you're trusting that the buyer is actually going to give you those shares at that specific point in time, which I guess is kind of maybe it's better in this scenario because like they're literally in the house, like they bought the house, so like they're gonna live there. So it's kind of like you have a place to find them if you need to go and find them, unless they just
mhm.
leave the house empty. But it's still like forward contracts, in my opinion, have always been a little bit sketch. I remember like when Stripe back in the day, Stripe was very, very strict about ROFRs and share transfers. They would never let anyone, they would always ROFR their shares and buy it back. And so a lot of people would do forward contracts in some of these names like Stripe. And there were definitely cases where like those contracts were not honored and it caused a lot
Mm.
of like legal issues because people would fight it out, you know?
Yeah, I think there's a massive lawsuit, issues for sure. But the other thing is, if they agree on a certain price, that's not going a range of price that's not going crazy out of the range that they promise, I think they're gonna just pay up. The only risk here is you get Anthropic shares now, it goes crazy. So the Anthropic guys have a cold fit, and I'm gonna sue you, and I'm not gonna give you money. I think that's the only risk. But if you're okay with a certain amount and use this as a collateral, then you can actually do the deal. Because what I think is, I don't know about San Francisco right now. Maybe San Francisco is fine, but the rest of the market, housing market, is not doing well. The sellers, I think it's historical high in terms of the difference between sellers and buyers in the market. So there's so many sellers. People are trying to sell their house, but there's not enough demand for it. So I don't know if this house is not selling well, and the seller wants to get $3 million, and they don't care about the upside of the Anthropic shares. They just want the collateral. Maybe this deal might go through, and they just pay out $3 million once there's an IPO. But I don't know. I agree with you, Kevin. Like, there's a massive loss risk if you're actually playing to see get the upside of these stocks.
So I looked up the house on Zillow. It is 160 Noe Street in San Francisco. 3 bedrooms, 2 baths, about 2,500 square feet. It's cute, but the I feel like for the chingus who are listening to us, we're almost like talking about the wrong story, which is they might be thinking, why the fuck would a 3 bedroom, two bath house be worth $3 million upon initial listing? Probably sell for 4 million, like by the time this thing is done. And yes, this is San Francisco. This is the Bay Area. It's ridiculous that a tiny ass house like this is selling for this kind of a premium. But check out
You,
160 Noe Street. It's
yeah,
nice to be appointed.
Chingus, you need to come to San Francisco and see how crazy expensive everything is, and then you'll understand why this thing is selling for $3 million.
You know what the thing that really bothers me about this listing is, and again, like go on Zillow, check this out. It looks like every single image is AI.
AI?
I
Oh
Ooh.
yeah.
I think they staged this with AI.
Some of
And
it might be. I'm looking at it. Yeah.
look at
You
the
know what's
fucking
also funny?
backyard. Look at that
The,
backyard. That looks fake.
yeah, that backyard's definitely AI. That's definitely an AI backyard. That's not real. But the
Yeah.
other thing is funny is that this I'm looking at Redfin, it only has 5,000 views. Like that's for how viral I thought that Instagram post went. Like this is very underwhelming number of views. Like they should have linked the Zillow page or the Redfin page to this because I think they would have gotten like hundreds of thousands of views if they did it properly.
Yeah. Well, good luck to the
Yeah.
seller. It's hilarious that they're pulling this stunt. You know, a couple years ago it was Bitcoin, right? It was
Yes, you're right.
like 2 years
Mm.
ago, right? And I mean, I think next is going to be tokens. So
Mm.
uh it's funny how we're creating all sorts of different kinds of currencies in order to sell real estate these days, or Lambos or whatever, like stupid shit.
This is really inspiring me. I think I want to do a similar strategy. Like
You trying to
I
sell
think
your
this
home?
Yeah, I mean, I'm thinking about it. I mean, I think it's a good time to sell in San Francisco.
I think it's a good time to sell in San Francisco. Yeah.
Oh my
Yeah.
gosh. Okay. Well, breaking news, Chingus. uh, you might have an opportunity if you're an Anthropic, specifically
Transaction.
Anthropic employee, to have a deal of a lifetime in Kevin's
Yes.
beautiful
If
home. It's
anyone
even
out there, Anthropic or OpenAI employees are out there and want
better.
to buy a home, please contact me.
You'll accept forward contracts, right? Is that right, Kevin?
No Ford contracts. Well, no,
Okay.
I actually want to use the marketing strategy. I just want to
Mm,
get the virality. I don't really care about the stock. I just want more
There you go.
people to look
mm.
at it.
Get that cash, man. Cash is king.
Cash is
Sort of.
king for sure. Yeah.
All right, guys. That was a lot of fun, different stories we just talked about. And whose turn is it to do the sign off this
I
week?
think it
I
might be
did
mine.
last week. Yeah.
It's probably my turn. Yeah.
Go ahead, Kevin.
As a reminder to everyone, nothing we talk about on this show is investment advice. So please consult your professional investment advisor, legal advisor. And, you know, it's always fun hanging out with my chingus here as an honorary Korean. And yeah, if anyone has suggestions for who we should talk to or bring on the podcast, please let us know. Always looking to bring on great guests and super excited to hopefully have Ian back in person soon and do this more live.
Yeah.
Finish
Do we
networking
have
in.
this office set up, Eric?
Oh yeah, almost. So I think by the time you're back, we should be in good shape. Yeah.
Oh yeah. Then once I'm back, we should do our first show in July in person in your
Okay.
office.
In the new Hustle Fund office. By the way, it's called Hippo Campus. That's the
Ooh,
new
I
name
Hippocampus.
of
like
We're
it.
gonna be at the
I had nothing
hippocampus.
to do with this. Elizabeth, my co-founder, named it. She created a new entity called Hippo Campus. I was like, "What the fuck is this? Can we discuss it?" She's like, "It's too late. I already filed the paperwork." So,
That's
shout
a
out to
great
Elizabeth
name.
for.
I like the pun. I like it.
Yeah, well, I'm glad you enjoy it. The office will be cool though. Um, Chingus, thank you so much. It's always fun to do this.
All right. See you next week.
Peace.
See ya. Ciao.